Press the bell icon on the YouTube app and never miss another update.
Friends, welcome to another video on your channel Profit in Equities. Now, if you like the content that we produce on our channel, please don't forget to hit the like button. Also, if you have not yet subscribed to our channel, please do subscribe and also click on the bell button so that you receive the notifications faster than everybody else. Now, HDFC Securities is one of the most well-known brokerage firms in India. Here, we present a stock which they think will double in the next few quarters. Please watch this video to know more. Now, the company in question is Binani Industries Limited, which is available at 130.85 currently. Now, the price at which HDFC Securities first recommended this stock was 107, and the targets put forward here were 136, 203 and 269 respectively. Now, if you were to look at the target when compared to the price at which it is quoting now, the potential upside is well in excess of 100. The stop loss here has been kept at 77 when this research report originally came out. Now, Binani Industries Limited is engaged in the business of logistic management services and trading in shares and securities. The company is engaged in the business of providing logistic solutions, media, publication services, trading in shares and securities, and also in trading and export of goods and management support services. The company's segments include zinc and byproducts, cement and glass fiber and its products, and also its geographical segments include India and out of India. Now, if you were to look at the one-year chart, you would see that very clearly the stock did nothing for the major part of the year, but of late there has been a major movement in the stock price. The company is a small cap one with a market capitalization of 404.04, whereas the book value for the stock is 720.92, which translates into a price to book ratio of 0.18. Now, the EPS is 3.12, which translates into a price to earnings ratio of 41.94. And the industry P is 37.08, which is largely in line to the company's P. Now, when a company generally trades at much below book value, it shows that the company has a lot of intrinsic value attached. Now, the company did not pay out any dividends, and the promoter holding here is average at 52.62. Now, coming to the reasons why HDFC Securities thinks that this could be an outperformer going forward are, they think that the value unlocking of attractive cement manufacturing assets is likely under IBC proceedings. Now, the company's fiberglass business is expected to continue to impress at the operational levels. Also, they think that any haircut taken by banks for settlement of loans to cement subsidiary is going to lead to hefty value accretion. Also, they have highlighted a few concerns which state that high risk with respect to the timing and the result of insolvency proceedings of subsidiary Binani Cements. Now, also they think that pending insolvency proceedings on Binani Industries is an overhang. Also, the structure of resolution uncertain under the IBC proceedings will tend to be a sort of a risk going forward. Also, high corporate guarantees and contingent liabilities due to state governments in both BCL and BIL would tend to be an overhang going forward. Now, they think that BIL has been overburdened with debts it had taken to finance its ambitious ventures in multiple industries. Over the past few years, with the Chinese regulatory hurdle and India infra spend slowdown, BIL's major subsidiary BCL underwent serious financial stress and ultimately defaulted. Now, BCL is right now under corporate insolvency resolution process, and the cement assets are reportedly being bid by more than 15 interested parties on account of its attractive asset base. They expect a good value unlocking for the shareholders of BIL, which is the holding company of Binani Cements Limited, by sale of the said business. With cement demand yet to pick up and subdued profitability, cement firms are opting for inorganic growth or brownfield expansion as it is both time and cost efficient. Now, major points which we have said right now are the ones which are contributing to their thought process of it being a profitable opportunity going forward. Now, HDFC Security feels that risk-bearing investors could buy the stock at the common minimum price, which was 107, and add on dips to rupees 87 to 91 band for sequential targets of 136 203 and 269 over the next 4 to 6 quarters, and they feel that this company could turn out to be an outperformer going forward. Now friends, please don't treat this as stock recommendations on our part. Please go ahead and do your own research. And this is all what we wanted to show you for today. Thanks for watching, and we will see you soon with another video.